Welcome back to Alpha Recap. Lane here. Today we're unpacking a cross-market momentum story. AI and energy drove gains while policy, lending, and trade injected caution. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Thanks for having me.
So Ryan, markets closed a mixed March. Big themes popped. Tech, energy, healthcare led, but policy noise and supply worries kept volatility elevated. Give us the high-level take.
Yeah, in plain terms, we saw concentrated strength in capital-intensive pockets. Data center builds, big life science funds, and fresh AI-related rounds showed where capital is going. At the same time, courts, state policy moves, and a few supply shocks meant the rally wasn't broad-based.
Let's start with those headline capital commitments. There were a handful that really grabbed headlines this month.
Right. And the number that really caught our eye was Nebius's $10 billion, a massive European data center project with about 310 megawatts of capacity. Then Whoop raised $575 million, and Blackstone committed about $6.3 billion to a life sciences real asset fund.
Those are some eye-popping figures. What do those signal practically?
They signal durable demand for the physical layer that supports AI and biotech. Data centers mean sustained capex for chip makers, electrical suppliers, and specialized construction. Life sciences real estate feeds lab demand, long leases, specialized systems. Analysts note these are multi-year revenue backlogs for certain suppliers.
So, what really stands out here is the stickiness of this spending.
Exactly. I mean, a hyperscale data center takes years to build and power. That creates contract visibility and steadier revenue for vendors compared with a one-quarter software binge.
Switching to energy, that sector had a big tape too.
Yes, Guyana continued to ramp production. A Texas LNG plant started commercial operations, and oil held near 4-year highs. But there were also Middle East attacks and an LNG outage, so price swings were part of the story.
So supply and demand were both in play.
Right. Tightness in physical markets pushed energy prices up, which supported upstream earnings and spurred more capital into projects. But those same higher input costs feed into utilities and industrials, so it's a mixed bag across sectors.
Policy and regulation kept things interesting too.
Definitely. A federal judge blocked an executive order aimed at public broadcasters. That was a reminder of how judicial moves can change a sector narrative quickly. Cannabis policy kept shifting by state, and there were fresh proposals around crypto and retirement accounts that could alter institutional flows.
Can you break down one of those regulatory threads in simple terms? Say, the crypto retirement proposal.
Sure. In short, the Labor Department floated proposals about safe harbors for retirement plans investing in crypto-related products. If regulators create clearer rules, it lowers a legal hurdle for big institutions. But proposals can also add constraints, so the outcome will influence whether pension money trickles in or stays on the sidelines.
Understood. Let's talk about the cross-sector correlations you called out in the report.
There were a few clean threads. First, capital concentrated in long-lived infrastructure, data centers, life science labs, logistics real estate, meant sectors tied to fixed assets moved together. Second, energy tightness fed materials and shipping costs, which in turn touched industrial margins. And third, policy was a horizontal risk. Communications, cannabis, and crypto felt the same regulatory wind.
Give listeners a concrete example of that first correlation.
Take Nebius's data center project. That's not just a tech story. It creates demand for transformers, specialized cooling, construction crews, and power contracts. So you can see ripple effects into electrical equipment makers, some materials suppliers, and even certain real estate sectors that host these facilities.
And on healthcare, Blackstone's life sciences move felt significant.
It was. A big private capital push into lab space suggests durable R&D demand. Analysts note that it supports valuations across biotech, keeps IPO pipelines healthier, and strengthens the market for lab-focused landlords.
Short reaction.
Wow, that's big.
Quick reality check on underperformers. Industrials, utilities, and sectors tied to trade and litigation didn't fare as well.
Yeah, not a great month for some of those names. Tariff probes, semiconductor litigation, and higher fuel costs created uncertainty that pressured margins and kept buyers cautious.
You mentioned semiconductor litigation. Why does that matter to the broader industrial complex?
Because modern manufacturing is capital intensive. Legal rulings or tariffs can change supply flows, delay orders, or force firms to re-gear supply chains. That alters CapEx timing and could compress margins if companies absorb higher input costs.
Let's do a rapid sector snapshot. Short hits for listeners who want the headlines.
Okay, technology. Big hyperscale projects and AI funding dominated. Energy. Guyana growth plus a Texas LNG start, but supply shocks kept volatility up. Healthcare. Large private funds and clinical wins. Real estate. Selective refinancing and big buys, but mortgage rates were a restraint. Materials. Drilling and steel restarts. Industrials. Automation investments but trade uncertainty. Utilities. Renewables momentum yet input price risks. Finance. Bank strategies plus energy exposure. Consumer. Deal activity and efficiency plays. Communications. Court action and big telecom deals. Crypto and cannabis. Policy drove headlines.
Short reaction.
Yeah, that tracks.
Let's translate the report's actionable insights into plain language for listeners, without giving advice, of course.
Absolutely. Analysts suggest a few monitoring priorities. Track pipelines for capital-intensive projects. Data center build timelines and power agreements were flagged as early indicators for AI compute exposure. Watch energy supply signals. New offshore volumes or LNG outages move spot prices fast. Treat regulatory calendars as catalysts. Court dates, exemptions, and rule proposals can re-rate names quickly. Distinguish durable demand from cyclical spikes. Data centers and lab space look more structural. And finally, pay attention to balance sheet sensitivity to higher rates. Refinancing dynamics were a major theme in real estate.
So more monitoring, scenario planning, less blanket assumptions.
Exactly. Analysts emphasize that momentum is concentrated. Capital is chasing structural growth themes, but breadth won't be healthy until key policy and supply uncertainties resolve.
A few listeners will want specifics on real estate moves this month.
Sure. There were large commercial buys by institutional players and a notable refinancing of about $223 million. That showed selective access to capital. Well-capitalized owners could refinance, but higher mortgage rates restrained new housing and highly levered segments.
And materials, any signals to watch there?
Junior miners stepped up drilling, and U.S. steel output ticked up after a blast furnace restart. Assay results and China demand remain watch items. Those will be catalysts for the space.
Quick two-line reactions.
Honestly, I was a bit surprised by the pace of some of that capital deployment.
Me too.
Now, the risks and a short watch list. Focal points only.
Go ahead.
Policy and judicial rulings in communications, cannabis, and crypto. Energy supply shocks or geopolitical escalation. The path of interest rates and mortgage spreads for real estate refinancing. And semiconductor litigation or trade policy that could dent manufacturing capex. Analysts suggest keeping these on a short-term radar.
Before we wrap, give listeners 3 clear takeaways they can keep in mind after today's show.
First, capital is flowing into long-lived assets, data centers, life science facilities, and select CRE. And that created pockets of sustained strength. Second, energy tightness lifted several cyclicals, but it also raised input cost risk for utilities and industrials. Third, regulatory and trade events were market catalysts. Calendar-driven news could re-rate names quickly. Analysts note these are informational points, not recommendations.
Great summary. Final practical note for our audience?
Track project milestones and regulatory dates. Those are the things that moved cross-market momentum this month. And again, the analysis reflects market data available as of March 31st.
That's it for today. If you want the report or the charts we referenced, head to stockalpha.ai.
And if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Ryan, appreciate your perspective. Always clear and helpful.
Thanks, Lane. Talk soon.